Welcome guys, welcome to my channel, welcome to another video. This is the Float Locker, and this is where you learn how not to invest like a degenerate. So I'm going to show you through full transparency, show you all my trades and show you how to invest your money in real time. You can see it all for yourself. Show you that it's possible to make money in the stock market. I mean, I don't know how many people would do this, but you know, I'm here to show you that it can be done, and I'll show you all the ups and downs, you know, all the losses, all the gains, you know, the trading, order executions, my thoughts, my portfolio updates. So in this video, I'm going to talk about my portfolio P&L year to date and my positions. So just going to do a quick review. I might do this weekly, but I'm thinking more monthly, because this is kind of a slow process, right? If I do this every week, I don't know if you'll get much value out of it, but every month I think we can really condense and have a lot of material in the videos. Alright, so first and foremost, here's my blog. Again, it's thefloatlocker.com. You'll see the link in the description below. Just go to it and then subscribe. You know, you could just drop in your email address and subscribe for me. Every time I post you know, anything, any portfolio updates, you'll get an alert. I usually post them on Sundays, and you can just kind of keep track of my you know, what's going through my head, and as far as my trades, and you know, what positions I'm in and what I'm thinking of the overall market. So as of October 9th, the week ending October 9th, we're up 51.5% in our portfolio since June. So this is using a strictly premium selling strategy. We just went through a horrible September. You know, I rode through that, and I'd say the most important thing that helped me get through that September was having small positions relative to your account size. If you're in too large, emotions come into play. You start seeing big P&L swings, you start getting anxious, and you want to just get out, right? Well, the problem with that is that if you don't ride out those volatility swings, you're going to miss out on the huge rallies. And unless you have a crystal ball, there's no way to tell when that happens. So you have to ride them out. Otherwise, you might as well not trade the market. So it's a compromise. It's proven. I haven't done a blog post on it or anything, but it's out on the internet. If it's proven that if you just stick and stay in the market consistently and just keep on investing, reinvesting, and not worry about the day-to-day fluctuations, you actually come out more ahead than someone that can time the market perfectly. I'll say that again. Someone that times the market perfectly, that gets out when gets out at the perfect time, gets in at the perfect time, you actually would make more money than them. I know it's hard to believe, but that's the case. Not only that, you don't have to spend time trying to predict the market. You just invest and keep, you know, you just stay with the strategy and just keep going and pushing forward. So yeah, so check out my blog post, or my blog. You know, you can check my weekly portfolio updates. I post them weekly. You'll see this week's as well very soon. Also, you know, just a breakdown of my trading performance. You can see that as well. I got only one so far from June through August, and you can see a complete breakdown of my trades. So just give that a check, and you know, let me know what you think. You know, send me an email or whatnot. You know, you can always contact me right there. Shoot me an email, and I'll respond to any questions that you may have. I'm just doing this just to help people out. I always get questions on how to invest in the market, and I constantly find myself repeating myself, just explaining my strategy. So I figured I'd just do this, do it once, and then have people that are really interested follow, because I really feel it'll help them out. All right, so with that, we're gonna go. We're gonna first look at my P&L. So I'm gonna go over here. We'll bring up my Thinkorswim account, and here it is. You can see my positions here, and you can see the P&L. You know what's open and whatnot. But the P&L year to date, last update was about 2,800 overall P&L. So this past week has been phenomenal. Has been a great move in the market, and this is a perfect example of just riding out the volatility. A lot of these positions were just old positions that were underwater, and I just either rolled them out or just stuck with them. Rolled them out in time, I mean. A lot of just short and premium, collecting credits, and when I got the move in my favor, those positions that were underwater went green. I took them off. Simple as that, you know. And then I didn't get all my profits back. I think I was up around over $5,000 in P&L, but this is actually really good. But on Friday, just me from market experience, especially after the move we've had last week, where I'll bring up a chart here. Last week we had a crazy move up in the market, and what was it on? I believe it was this day where we were. Oh, nope, I don't think so. I think it was this day. Yeah, 34.21 down. Yeah, okay. This day right here. It was October 6th. This is when the president tweeted that no stimulus would be visited until he's reelected, right, or something like that. So we were actually closing on highs of the day, and he tweeted that out right before the market closed, and the market just crashed, right? Went down to 3,330. 3,330 was the low. And soon after that, we literally ripped 4 days straight back up. He kind of reversed his stance on it. Everything was back on track, right, for the stimulus. Well, from market experience, I just feel, especially 4 up days, bulls are getting a little tired here, right? I mean, that's a huge move, and we might keep going up. That's not to say we're gonna stop going up and just start to short everything, but as a precaution, and especially since I had a huge week in this portfolio, I decided to take off a lot of positions. A lot of positions came back in the green, so I took them off, and freed up quite a bit of buying power. But I'm going to go over these positions now. So here we go. So we got AMD here. This was more. I got in when the stock was trading around $80, and pretty much I just sold a put, an $80 put. Actually, it was a $75 put initially. And here, I'll bring up the chart. So we got AMD here. Yeah, it was around here. I sold the put, wrote it up, and then I decided to lock in the gain, quote unquote, by selling a call. I sold a $100 call when it was trading around $86, $87 a share, and that's how you implement a strangle, right? So first, my strategy, I like to sell a put in the stock that I'm bullish in, and I write it up. right? I use a little technical analysis. I look at a chart and I figure, okay, this is going to make a move up. So I'll sell a put, right? When I feel the move is getting a little extended, or if it has a too quick of a move up, I'll sell a call against the position to quote unquote lock in the gain, right? I mean, a way to lock in the gain also is just to buy back the put at a cheaper price, and you collect all that premium. So instead, I like to sell a call and create a strangle, right? Not only that, but I rolled up the it was a $75 put. I rolled it up to 80, and then you know, I'm just kind of locking it in, sort of. And then it had that news a couple days later, I believe, where they were gonna buy out another company. So the stock kind of dropped. So that actually worked in my favor, right? Because I have that call gaining value now as the stock dropped. So I'm just, as long as this stock stays between $80 and $100, that's a huge range. By the end of November expiration, November 20th, I still have over $5 in the puts and over almost $2 in the calls. So $7 a premium. That's almost $700, over $700 in premium left to suck out of AMD. So we're gonna ride that one out. You know, I'm pretty much gonna just leave it. All right. So next, what we have is EWW. Nothing really to talk about here. It's an ETF. I usually have a strangle on here, but I took off the put side of it because it was well in profit, and I didn't roll it out because there's not enough, or it's not really in the time. It's not within 20 days till expiration, right? There's still like 40 days left. So I kind of left the short call on. Not only that, but this also helps bring down my portfolio delta, my beta weighted delta, compared to the SPY. So what this does is it helps me neutralize my portfolio. So whether the market goes up or down, my portfolio isn't as affected as if I was more in the positive delta, which means that if the market goes up, I benefit greatly, and if it goes down, I lose. I lose up to that multiple, whatever the delta is, right? You really can't see you can't see it on here. Maybe I just don't have it configured right. I don't trade on the desktop, but it is on my phone. But there is a beta weighted delta. Right now I'm around 20 positive deltas, which is great for me. Usually I'm around 100 positive delta in this portfolio, so this helped bring it down greatly. So nothing really to talk about there. That one is just like a strategy I put on it month after month. As you can see, my doesn't show my P. Actually, we can see my P&L year to date on the web page version. I brought this one up. So P&L year to date for EWW, we got 711 bucks. That's just selling strangles every month since June. That's all I've been doing, right? That's how much I've collected. All right, so next one we got JKS. This is more of a, you know, I should have did this in my trading account, but this is, I have a separate account that I use for more active plays, but this is more of an active short play that I just threw on. Bought some puts expiring next week. They're not doing too well, obviously, down 177 bucks. I think I got like another, I think they're probably another 140 bucks left worth. I'm probably just gonna leave it or take it off on Monday, depending how this works out, right? So not much on there. Lemonade, this one I'm underwater on now. We just had a huge move in it, so I'm gonna bring up the chart of it. This one is really going against me. So when the stock was around this area, around below 50, I sold a put, and then the stock started trending up. I think around here, around 55 or around here, I sold a $60 call against it to kind of lock in the gain. But man, this thing just kept ripping. That's an unbelievable move. I mean, literally almost from $50 to $70, you know, almost a 50% move within days. I mean, that's very tough to defend against. So I mean, you just gotta wait for the market to cycle back and see if we can bring it back down. I've already defended it against it. I had a $45 put. I moved it up to 50. I thought about going to the 55 just to really neutralize it, but I want to see what it does on Monday, and then I'll act then. I'll probably roll, if it keeps going higher, I might have to roll this up to straddle for a 60-60 straddle, but I really want to avoid that. So that's kind of like a last case scenario. So we got time on here. We're gonna see how this works out. Eventually this thing should pull back. There should be a day where it sells off. It's just not sustainable, and we got plenty of time left, so I'm not worried. Right now I am down on this one, I think about $300. If we look on here, yeah, $300. This is the only position I've had on it. So I should have stuck with the short puts, but you know, shoulda, coulda, woulda, right? So that's the game plan for that one. Lift. This one is just a position I have on. You know, I just short puts in this every once in a while. A little underwater on this one. This one was, I have the $30 put. I had it in October. I rolled it to November, collected some credit, and I'm just waiting for the cycle to come back and waiting for the stock to get back over 30 so I can just collect all that premium. Premium left in it is here we go. Fourth, or doesn't show current price on the web. I gotta really configure that. But if I look over here, lift, got it here, 417. So I got $400 left of you know, intrinsic and extrinsic value, right? So it's deep in the money, just letting it play out. All right, this MMD EDF, this is one of the just a play from one of the trading services that I subscribe to. You know, I got a video coming out. Actually, sorry, I have a video out already. If you check it out in the card here, but you'll see that I subscribe to a trading service, and rightfully so. For me, it just saves me a lot of time. You know, these trading services, they help me out. They find plays, and you know, I just find what looks good to me, and I run it. You know, it saves me a lot of time. I don't have to flip through charts and try to find plays. They do it for me. So it's money well spent, I have to say. But yeah, that's all this is. It's kind of just like a this is a play here. So I went in a little small, just 1,500 shares. It's worth 90 cents. You know, just looking for a quick move. Nikola. So this one, I really like the setup here. So I sold the $22.50 puts for November, and if we go over here, bring up the charts, we got Nikola, and you know, it's just kind of holding up here, you know, and I feel that a lot of the bad news is out of the way. It's all out there. You know, this thing got really beaten up. It's been catching hell, right? So but here we go. So we're kind of just holding this pattern here, and the Nikola puts are pretty you know, they're pretty expensive, you know. The options, there's a lot of premium in them, so I went ahead and sold 2 of them. It does take quite a bit of buying power, so it's about $2,700 of buying power that it took for 2 contracts. But I really feel it bottomed out. So it's just kind of chopping around. So I sold 2 puts, you know, and just waiting for it. P&L open. I'm already up $258. I think I've had it open for about a week or so. And I'm just waiting. I'm just waiting, man. I still got $3.60 of premium here times 2. Over $700 left in premium that I can collect from this bad boy. So within the next 40 days, I can make another $700 just on this stock. So we're just gonna keep that one going. And that's what I think. So I mean, obviously things could change. This thing could really go to shit, but that's the risk I take. So there's ways to defend it, and I'll show you how I defend it if things go south on me. All right, so that's Nokia. Here's a stock. This is a 5G play. I initially bought. I've been selling puts. I've been selling puts. Right now I have shares. I have 1,000 shares right now. I've been assigned twice, and here's why. So we'll bring up Nokia. I started selling puts up here. I started selling I started selling the $5 puts. Collected the credit, so I had a $4.80 cost basis on the shares when I got assigned the first 500. Then the market went to shit during September, and I think it kind of went over, oversold. I sold another 500 or 5 contracts of the 450 puts when it was down here. I was just trying to catch more delta when it get the move up. Didn't happen. I kept the credit that I sold it for, and then now I'm assigned 1,000 shares. So my cost basis, I believe, is probably around probably more like 430, 420 ish, maybe 440 ish, around there, with all the credits I've gotten. So game plan on that is to sell covered calls. So starting on Monday, I'm gonna sell 10 contracts of Nokia, right? So I'll show you here. Let's see how much they're worth. So if we go to Nokia, okay, here we are on the option chain for Nokia. So what we're gonna do is on Monday, I'm gonna sell 10 of the 450s, around 14 to 15 cents. So that'll give me about $140 in premium to collect. So I'm selling calls against my shares, and this is what I've talked about in I got a video coming out on my strategy on selling puts, and I talk about covered calls. So I got assigned the shares. I was selling puts, got assigned the shares. I got assigned twice. So I had five contracts each time. So now that's 500 shares each time. So now I have 1,000 shares. You can see down here, right now P&L open 710, but I'm actually only down 395. That's because I've been collecting credits, and the credits help me out, right? And like I've said in the video where I talk about selling puts, I talk about, if you want to be long a stock, just sell puts in case it goes against you, and you'll lower your cost basis. So now I own the shares, right? I've wanted to own them at 5. I actually got them a little less, around 430, 440, $4.30, $4.40, whatever. So I got them cheaper, right? So great, that's good. So what I want to just do from now on, sell calls until this stock gets back above 450, right? So if it gets back above 450, I will make back from $4. Right now the stock is worth $4 to 450. That's 1,000 shares times 50 cents. I'll make depending how much credit, how long this goes on, this could go on for months. This could stay under 450 for months, and I'll just keep collecting premium every month, right? $150 a month. So hopefully, if this tomorrow goes to over 450 and I get a sign, right, I kept the $150 plus the 50-cent spread here, the difference, which would be $500. 50 cents times 1,000 shares, $500, $650, right? $650 minus 400, I'll make about 250, and then from there I will go back to selling puts, right? And the cycle starts back over. Everything restarts and continues on. So that's it for Nokia. That's the game plan for that one. We're gonna go to the next one. We got Tesla. I have some shares in here that I've bought. I think like 480. I believe I bought them around 480, and so I'm just holding those shares. It's just more of a long-term position. And I also sold a put spread. You know, I sold the put spread because it's very expensive to sell naked puts in Tesla. My account's not large enough. It literally takes about 13 to 14,000 of buying power. So there's no way I could do that in this account. It would just be my only position. So I did a $5 wide spread, collected about $200 in premium. You know, I'm just waiting for it to just dwindle down. Right now I'm up about between this spread about $60, right? So that's it for that. WFC, Wells Fargo. This one I've been battling day in or month in, month out. I think for months, for a good few months here. Let's go back to my positions. You can see here, Wells Fargo. I'm still in the green here. P&L year to date 88.50. This thing's been going against me. I've been selling the $26 puts every month. Keep collecting the credit. We finally have been starting to get a move up towards 26. So I've been just kind of, you know, collecting, getting back in the green. So that's been helping me out. So this is just kind of keep rolling out the puts until eventually the market in Wells Fargo turns around and goes in my favor. That's pretty much the game. It's a waiting game. Patience. That's all it is. Just patience and waiting. You know, like they say, you know, the stock market is just a transfer of wealth from the impatient to the patient. So I'm just waiting. All right, Walmart. I actually went long. This is actually, I bought calls here. Kind of a bigger position for this portfolio. I kind of bought them at the wrong time, but I gave me some time, 96 days. So I'm down 720, $30, right? So this took a big hit during the September volatility. So this is why I primarily sell options, right? Because, you know, if I was selling the puts here, I'd be on the other side of this trade, be in the green. But you know, it is what it is. But yeah, I'm honestly banking on a kind of a big move in Walmart. I think it's really poised for growth. There's a lot of good news coming out on it. I think it's ready. So you know, just be on the watch out for that. All right, that's my portfolio. As you can see, we're up pretty nicely year to date. So I did take off a lot of positions on Friday just to neutralize my portfolio delta. A lot of them were in profit or very close to profit. So I just felt, you know, we just had quite a big run, like I showed on the ES futures. I just feel like we're a little overextended. I mean, we could still keep going, but you never know. So I was better safe than sorry. I want to kind of lock in the gains and then just kind of give my portfolio a little of a reset, right? So that's all. But yeah, I appreciate you guys checking out this video. If you have any questions, post them in the comments below. If you want to see this weekly or more of on a monthly basis, let me know. I might just do this monthly because usually the positions will stay around the same for the month. unless something drastic changes. So, but yeah, any questions, feel free to email me. Make sure to go to my site, thefloatlocker.com. And thanks again. Thanks for watching. Have a good day, and then good luck trading.